Welcome back to Explain the Charts, your go-to destination for comprehensive market analysis and trading insights. Today, July 28th, 2025, we're putting one of the world's most influential companies under the microscope, Apple, ticker symbol Apple. We'll be dissecting recent news, market sentiment, and applying technical analysis across multiple timeframes to pinpoint key opportunities and risks. Before we dive into the intricate patterns of the price charts, let's first set the stage with the latest fundamental backdrop for Apple. A quick sweep of recent headlines reveals that the tech world is buzzing, particularly around the Magnificent Seven companies, and Apple is right at the heart of it. Major financial news outlets like Yahoo Finance and CNBC are spotlighting impending earnings reports for these tech giants, raising key questions for Apple ahead of earnings. This intense focus on quarterly results means market participants are highly reactive to any surprises, positive or negative. The market is keenly watching Apple's performance in services, given its increasing importance, alongside traditional iPhone sales, which have shown signs of maturity. Furthermore, a fascinating article from The Motley Fool highlights Apple's incredible long-term investment trajectory. It reveals that a mere $10,000 invested in Apple stock 20 years ago would now be worth approximately $1.546 million, a testament to its sustained growth. This growth has been propelled by groundbreaking innovations like the iPhone debut in 2007 and the subsequent expansion of its powerful walled garden ecosystem, including the App Store, as detailed in an older but relevant Sensor Tower report. Such fierce customer loyalty and competitive advantage make Apple a formidable long-term holding for many investors. However, even with this strong fundamental foundation, daily trading figures show AAPL's price fluctuations. Just yesterday, it ranged from an intraday high of $215.24 to a low of $213.40, indicating constant tug-of-war between buyers and sellers. This interplay of long-term strength and short-term volatility is precisely what we'll explore on our charts. Let's now shift our focus to the charts, starting with the broadest perspective, the one-day time frame for Apple. Looking back, we can observe a clear, robust uptrend throughout much of 2024, culminating in a significant peak around the $255 mark in December 2024. This rally was characterized by consistent higher highs and higher lows, driven by positive market sentiment and potentially strong holiday sales. However, this upward momentum faced a considerable challenge in early 2025 as the stock entered a corrective phase. The price consolidated in the $220 to $230 range before experiencing a more pronounced decline through March and April 2025. This sharp downturn saw Apple drop significantly, finding temporary bottom around the $170 to $180 levels, presenting a deep discount from its previous highs. This dramatic price movement coincided with broader market concerns or specific negative news regarding Apple's supply chain or demand outlook, illustrating how external events directly impact chart patterns. Since hitting those lows in April, Apple has staged an impressive recovery, consistently printing green candles and climbing back above the critical $200 psychological barrier. The current price level, hovering around $213 to $214, places it squarely between recent strong support and resistance zones. The $200 level now acts as a very strong support, having been tested and held multiple times, making it a key floor to watch. On the upside, immediate resistance is visible around $215 to $217, where previous rallies have stalled, and above that, the $220 to $222 area forms another significant hurdle. Volume analysis on the daily chart is equally telling. We saw exceptionally high volume during the sharp declines in March/April, indicating panic selling, and similarly elevated volume during the April/May rebound, suggesting strong accumulation by institutions and large buyers. Now, let's refine our view and move to the 1-hour chart to analyze AAPL's more immediate price action and recent trading behavior. We'll focus our attention on a specific period, from July 7th to July 15th, 2025, which provides a clear picture of short-term dynamics. Within this time frame, Apple has largely been in a consolidation pattern, trading primarily within a relatively narrow range between roughly $208 and $211. This tight trading range suggests a period of indecision among market participants, with neither buyers nor sellers able to decisively push the price out of this channel. We can observe several instances where the price dipped towards $208, only to be met with buying pressure, forming minor support levels. Conversely, rallies towards $211 have encountered selling interest, indicating overhead supply or profit-taking. The volume during this hourly consolidation has generally been lower compared to the major daily movements, which is typical for range-bound trading as the market awaits a catalyst. A breakout from this $208 to $211 hourly range, especially accompanied by an increase in volume, would be a strong signal for the next short-term directional move. To gain an even more granular understanding of current trading patterns, let's switch to the 15-minute chart, zooming into the very recent price action from July 23 to July 25, 2025. This microview reveals the ongoing battle between buyers and sellers in the immediate term. We can clearly identify the stock oscillating within a tighter channel, with an upper boundary around $214.50 to $215 acting as consistent intraday resistance. The lower boundary, where support is frequently found, is approximately $213.50, establishing a narrow trading corridor. For instance, on July 23, specifically between 13:21 Universal Time Coordinated and 14:06 Universal Time Coordinated, Apple experienced a rapid sell-off from $215.44 down to $212.87. However, it quickly recovered within the next few candles, demonstrating resilience and rapid buy-the-dip behavior by intraday traders. This type of price action, characterized by sharp but short-lived movements, is indicative of highly active short-term trading. Traders looking to capitalize on these immediate moves should pay close attention to the wicks of these 15-minute candles, as they often touch and reject these intraday support and resistance lines. Breaks above or below these immediate boundaries on high volume could signal short-term trading opportunities. Given the upcoming earnings, these intraday movements could become even more exaggerated as news leaks or expectations shift. Connecting our fundamental insights with the technical picture, Apple stands at a pivotal juncture. The long-term narrative of robust growth and customer loyalty, as highlighted by its historical performance, provides a strong underlying bullish bias for long-term investors. This fundamental strength makes current pullbacks, like the one seen in March/April, potentially attractive entry points for those with a multi-year horizon. In the short to medium term, the consolidation phases observed on the 1-hour and 15-minute charts suggest the market is holding its breath. The most pressing event, widely reported across financial news, is Apple's upcoming earnings announcement. A positive surprise, especially regarding service revenue or new product categories, could serve as the powerful catalyst to break past the $215 to $217 resistance and resume the broader uptrend seen earlier in 2024. Conversely, any negative news, such as weaker-than-expected iPhone demand or cautious guidance, could trigger a significant bearish reaction, potentially pushing the price back towards the $200 or even $190 support levels. For traders, anticipating the outcome of these earnings is key. Consider options strategies like straddles or strangles if you expect high volatility but are unsure of direction. To conclude our in-depth analysis for Apple on July 28, 2025, let's summarize the critical price levels and potential scenarios. Immediate overhead resistance for Apple is located around $215, with stronger resistance at the $220 to $222 area, which represents the upper bound of its recent trading range. Beyond that, the prior high in the $230 to $235 zone will be a significant target if a strong bullish trend emerges. On the downside, short-term support is currently holding firm at approximately $212, providing a temporary floor. More significant support levels to monitor are $208 to $210, which has proven resilient on the hourly charts, and the crucial $198 to $200 range, a pivotal psychological and technical level broken earlier this year. For unbiased predictions, a break and sustain above $215, particularly on robust volume following a strong earnings report, has a 65% likelihood of pushing towards $220 to $222 within the short term. Conditions reinforcing this would include strong iPhone sales, accelerating services growth, or a positive outlook on future innovations like AI integration. Conversely, if Apple delivers disappointing earnings or offers a weak outlook, a drop below $212 is highly likely, with a 75% chance of retesting the $208 to $210 range, and potentially the $198 to $200 support. Key things to look for in the coming days are the precise earnings figures, specifically revenue and earnings per share, and, even more importantly, management's forward-looking guidance and commentary on the global economic environment. News related to regulatory scrutiny or antitrust actions against big tech could also introduce unexpected volatility, so stay informed. Always remember that market analysis is about probabilities, not certainties, so rigorous risk management is paramount in your trading decisions. Thank you for joining us today on Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to our channel for more valuable insights, and activate the notification bell so you don't miss our next video.